Hello and welcome to another update video about Natgas. Haven't covered Natgas now for a few days, but we've seen that break of the trend line that we've been watching for. That would indicate to us that possibly a fourth wave corrective rally is now unfolding. So we've got basically, we have seen those lower lows that we've been waiting for basically all year. So that is good. Remember that already back in April, we wanted to see another low, and that definitely is shown. It was correct to assume that this sideways action is a fourth wave and that one more wave down will happen. So I'm extremely pleased to say that our, let's say, medium-term outlook has worked out. It was frustrating, this sideways action into late summer and actually autumn, but then we've finally seen that decline end of October. Okay, so anybody who's been with us here, the overall idea of one more low on the chart has materialized. Now obviously we're in a situation where it's all about, okay, how low does this drop before really a substantial reversal is happening? And I think we are not far away from a bullish turnaround. It might already have happened, but my primary scenario for now is that this is only a third wave low. And yeah, I'm going to tell you what I told you all year, that one more low is likely on the radar here. But this is now obviously a completely different perspective we have to take. It's a much smaller time frame, a much smaller wave degree. Okay, so we need to understand that, yeah, you know, sometimes those lower lows don't, they might not even show, you know, we might get a dip down in this last low then to around about 189, sort of roughly 180, something like that. We will be able to define that better once we have a confirmed top in place in wave 4. So essentially we're looking here for a 5-wave pattern to the downside of the August high. 1, 2, 3. Again, this could be the 4, 5. I don't have to, I think we turned around exactly when I made the last video, to be honest, because I checked, I don't need to change resistance. It turned around where it needed to here. We had this Fibonacci support area that I communicated with you. The resistance, or let's add the 23.6 Fib. Just share with you standard resistance basically. Why is that important? Well, it's important because we need to understand, again, primary scenario would be still one more low, but alternatively the low is in. Okay, so I mean, if you zoom out of the chart and you know where Natgas, is coming from, really, I mean, what are we talking about? Talking about, okay, is this the low, or do we get a little bit more lower low? To keep the perspective, this is really just nothing really down here. Okay, I think we're fairly close to a very substantial low, but it's too early for me to confirm that. So I want to share with you, this is resistance between $2.65 and $3.12. A break above $3.12 will indicate that, yeah, we have possibly already bottomed, because it would be too aggressive for a fourth wave, anything above the 50% Fib level. So let's take a look at the microstructure of this increase. The idea is that if this is really a fourth wave to the upside, it is likely going to be an ABC structure. So we have an A wave that's pretty clearly defined, a B wave down, and we could indeed be moving up now in a C wave. That structure, that pattern allows us to also define a potential target, because if we have the A wave complete and we have the B wave complete, then we can go to the smaller time frame to use the Fibonacci extensions to calculate a target for wave C. And typically I'd be watching the area around, let's see, the 100% extension level first. We take the top of that wave 3 here at 259, go to the the top of the A wave, go to the low of the B wave, and I'd be looking for, let me add the 100% extension, and I take out the higher ones. But this is sort of a range that's going to be relevant, specifically starting with $2.75. That's going to be relevant, but probably if I look at the chart, it's probably more around 284, 288. And that would be ideal because we've got the 38.2 retracement around 290. That's typically an ideal target for a fourth wave. Looking at the subdivisions, this is likely a 1, this is likely a 2, we're likely still in the third, and there is a 4 and a 5. Change the wave degree. So we're likely still in the, what did I say? We're likely still in the third, right? Why? Because if I take the length of 1, go to the low of 2, what I'd like to see normally is that the third ideally reaches the 1.38 or at least 1.236 extensions. So at 266 or 269, well, they haven't been reached. So my view would be we're ideally still in the third, then there should be a fourth and a fifth wave. Okay, so that should give you everything. This assumption that we still keep climbing a little bit higher towards that 288, 290 level is only valid as long as we're holding this wave 2 low, which was at $2.41. Below that level, I would have to assume that we're already going down more directly. That's my update about Natgas. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in daily updates about the S&P 500 as well as regular updates about stocks, check out our stocks and S&P 500 service. You can find the links in the video description. Thanks a lot for watching. Bye-bye.